welcome to this month's episode of Fintech Firebrand. I'm Virginie O'Shea, founder of Firebrand Research, and I'm here to chat to you about this month's Fintech and FinReg news. Now, I can't start this episode without, I guess, addressing the biggest thing that's happened in this month, and that is the US election. Not a surprise to many, to be fair, in terms of the outcome, but a big lot of changes ahead of us with regards to the regulatory agenda in the US market. So with the Trump administration coming in and the changes that are likely to be made, obviously we're going to see the heads of all of the different regulatory bodies likely changing. The SEC and CFTC in standard often are changed when there's a new president in place. So it's anticipated that Gary Gensler will step down as the SEC chair, and the CFTC chair, Rustin Benham, will do the same. So it'll be interesting to see who heads up those regulatory organizations afterwards. There's been a lot of speculation, particularly around the SEC. It seems that Hester Peirce, who was one of the front runners ahead of declaring that she doesn't want to be the chair of the SEC, apparently. She hasn't said this publicly, but apparently behind closed doors, she's not that keen on the job. But one of the front runners that is currently appointed at the SEC is Mark Ueda, very hard to say. So that should be interesting. There's also been a lot of speculation about people from the industry as to whether they may be appointed into the SEC, especially those that have previous regulatory experience. Heath Tarbert, who was at the CFTC beforehand, was also being touted as somebody in line for the SEC job as well. So when we see the changeover, obviously we'll see a change in agenda. The SEC has been, in particular, has been very active over the last 12 months. I think I talk about it every month, but they have been very active on the crypto enforcement side of things in particular. So there's likely to be a slowdown in that. It is anticipated that will happen. We'll also probably see some regulation being introduced. There's a lot of different proposals that have flown around the House Financial Services Committee over the last 12 months. So one or more of those may go into actual official approval. We may see more progress on that front with regards to the cryptocurrency side of things. We've also seen after the election, most directly, an increase in the value of cryptocurrencies, much more trading and activity in that space, buoyed by this expectation that there will be a more favorable regime for crypto assets in the future in the US. There's also an expectation that traditional FinReg will be sort of facing deregulation. There'll be some stepping back of some of the extensive number of SEC requirements that have come into force. There's been a signal by some of the appointments within the administration that there's going to be a harder line taken on environmental, social and governance topics, particularly when it comes to the environmental side of things. We are likely to see those being stepped back. So lots of change on the regulatory front. It will also have, as you can imagine, big ripple effects across the globe. Whenever we do see large markets having huge political changeovers like this, it often has an impact geopolitically. So it will be interesting to see the trade tariffs that come into force that Trump has already talked about for China, holding tariffs against countries and regions that are trading with China. So that will likely impact the EU in some regard. We'll also maybe see some actions taken against the UK. We'll see. But certainly an interesting one from the economic perspective too. So many question marks hanging above a lot of things at the moment. There'll also be some interesting developments, I guess, unfortunately, on the front when it comes to Russia and the Ukraine. Will there be continuing support there? We don't know. If there isn't and the US pulls back, that should also impact sanctions as well from the US perspective and put lots of pressure on other regions with regards to the financing of the war there. So it will be a very interesting time over the coming months to see what shakes out, whether the appointments within the approval, whether the Republicans approve all of the appointments that Trump has started making will also be interesting to see. Aside from all of the stuff that's happening in the US, there certainly hasn't been a slowdown in Asia, in particular with regards to regulatory developments. The Monetary Authority of Singapore has been particularly busy over the last few months, as has the Hong Kong Monetary Authority. We've seen both of them having big fintech events, as they do at the back end of the year. We've also seen some interesting developments with MAS and its work on quantum computing that I think I mentioned either last month or the month before. It has the regulator has been working with other regulators around the globe, lots of other different fintechs as well, and industry partners to look at post-quantum cryptography to understand in a quantum computing world where traditional encryption is put to the test and likely won't stand up. What can financial institutions, what can regulators do to prevent cyber crime? And to that end, the Banque de France and MAS conducted an experiment in the last month as well. They had a successful result there with regards to strengthening communication and data security. So interesting area, definitely something to want to watch in that front. So certainly a big sort of technology development there that MAS is focusing on. Now, obviously, technology is a big area for them, and another area that's big for them is the ESG arena. There's been a huge focus on green and sustainable finance in all of the major Asian markets over the last 12 months. Singapore announced this month that it is committing $500 million US dollars equivalent in funding to support decarbonisation in Asia and in general, in the region as a whole. So definitely a big commitment there. And it's part of what is called Financing Asia's Transition Partnership, FAST-P, as it has been acronymized. That was launched by MAS last year. So this is a big plan to help build a lot more capacity to support sustainable finance and transition economies. So very big developments there. Hong Kong similarly has been working on various green events as well, alongside all of its fintech events. It's also focusing on supporting sustainable finance and the transition there too. So we expect to see many more developments on that front in the coming months and into 2025. In Europe, there have been some important regulatory developments with regards to the competitiveness of the EU when it comes to issuers and investors and encouraging more investment into EU in the long term, which has obviously been an ongoing theme over the last few months with regards to the Draghi reports and a lot of other different reports that have come out from the EU on how to improve the EU's global footing. Now, one such development was this month with regards to the proposals come out from ESMA, the European Securities and Markets Authority, looking at the prospectus directive, which some proposals there to try and help simplify the process of building a prospectus, making sure that data related to ESG is included in there. Also reducing the listing burden. That's part of the listing directive, which is coming into force in July 2026. So big changes on the front there. We've got some regulatory technical standards related to that need to be approved, but they're out for consultation as well. So definitely some interesting developments. It's hoped that the process for the EU approving prospectuses will be streamlined, speeded up. There'll be some changes to how metadata is used with regards to prospectuses and the coding of those prospectuses to make them much more accessible to investors. So a lot of developments there that could impact the investment community, anyone servicing that community. So big things to watch going forward. There's also been a lot of interesting discussion globally, especially among large banks, particularly bank CEOs, including JP Morgan's Jamie Dimon, about the potential fate of Basel Endgame. Now, obviously, given the changeover, this was prior to the changeover in administration, and obviously confirmation that Trump's coming in. But there's been a lot of chat about the onerous requirements of Basel Endgame and how that sort of will impact the profitability of banks, the stability of banks in the future. There has been toing and froing between different communities about this topic for a long period of time. The EU has indicated that there's going to be a slowdown in the implementation of the Basel requirements, the updated Basel requirements under Basel III. That could spell out that people are predicting that could spell the end of Basel III. So I don't think that's particularly going to be the case, but certainly it does mean there may be a slowdown globally. Who knows what will happen in the US market too? So something definitely to watch for people in the risk space. Now, my quick final thoughts for the month with regards to how much effort and time goes into a lot of the innovation projects that happen at financial institutions and how much information we discard as part of moving on quickly from failing fast a project and not particularly taking time to analyze, also to do some sort of anatomical research into what went wrong with regards to some projects. I think a lot could be learned from assessing failures as well as successes. Not that you have to celebrate failure, but it certainly is something that should be examined, particularly when it comes to the people, process, and technology aspects of those projects, understanding exactly what could be improved next time, particularly if there's some learnings that could be helpful for projects in the same vein in the future. It also helps us avoid repeating the same mistakes over and over and over again, which does happen. And that also happens in the regulatory community for that matter, but it's definitely something that we should think long and hard about, our process for innovation and how we support that feedback loop back into the business, back into R&D, and back into the cultural and educational learnings that we can glean from some of these projects, even if they don't go that well. So my advice is maybe fail fast, but also learn fast from those failures.